Hi, and welcome to the 2020 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me today on this weekend edition. Hope everyone is doing great out there. Our thoughts and prayers are with everyone who's lost their jobs and also have gone through natural disasters like fires and hurricanes in the past 2 months. Just know that we're thinking about you and that we're all staying together in faith, and we're going to make it through this okay. Well, we're coming to the fourth quarter, and today I want to talk about two items of interest this weekend. Mortgage rates at an all-time low, and I also want to talk about the ending of the stimulus package, the second stimulus deal, which many of us have been patiently waiting to see what they're going to do, Congress and the administration. But it looks now that we don't think that there's going to be there's probably just a less than 20% chance of a second stimulus being passed before the year end. So basically 2021 first quarter is when they're thinking about giving more stimulus, and that's what the stock market is worried about. That's what Wall Street and Main Street are both looking at closely to see what type of K-shaped recovery is going to come out of this thing next year, which we know is not going to happen, but we're just looking to see the indicators. So first off, the mortgage rates, as you know, set another record low this past week, and that's sparking new strength in refinancing. So basically, people are refinancing their homes, are using them as ATMs to kind of add some type of leverage and equity and leverage, so that they can not only pay bills and get ahead of the game and with preps and stuff, but just as a way to keep afloat. As you know, as selling your home is difficult now, even in this time, as you know, even though there's buyers, there's not really as many buyers as there used to be. So refinance volume surged to the highest level since mid-August as mortgage rates dipped to 3.01%. Refinances jumped 8% last week and were 50% higher than a year ago, according to the Mortgage Bankers Association. You might have noticed in a lot of these suburban towns and cities that there have been a lot of open houses at properties, and real estate agents have been taking their sweet time and showing these locations in an attempt to get them off the market. As you know, many homes are staying on the market more than 180 days. About 30% of 35 to 35% to 40% of the new homes have been staying on the market. The used homes, have been stayed on the market for more than 180 days. So that is somewhat of a good news, that the mortgage rates are down, because if you're interested in buying a new home or a used home in a community, it certainly beats renting. Where you're throwing your money away. So at least you can build some equity when the time comes to refinance, or to take out a HELOC, a home equity line of credit. So that is some good news for the economy. I'm not going to knock that as being a bad thing. However, we have to realize that eventually all of these low rates, what goes, the saying that says what goes up must come down. Okay. And so the converse is not always true. What goes down must come up. So right now we're in the longest expansionary period of this economy. It's been over 12 years expansionary period. Even though it's fake, it's propped up by the Federal Reserve and the money printing. But just think that eventually it's going to have to end. Eventually the Federal Reserve is going to be the bank is going to be backed into a corner where they have to raise rates, because soon they're going to be even losing money and charging you to keep money at the banks like Bank of America or Chase or Citi or Wells Fargo, etc., or Barclays. So eventually they're going to go up. And when they do go up, they're going to go up not by a little bit, but by a lot. We're talking about interest rates could go up 3%, 5%, 6% easily. And along with inflation going up, and that would just be the worst case scenario for the American economy, along with stagnating wages, which we already have. Most Americans haven't got a real wage in the wage in the last 25 years. So the average contract interest rate for 30-year fixed mortgages with conforming loan balances up to $510,400, anything over that is a jumbo loan, slipped to 3.01% from 3.05%, while points decreased to 0.37 from 0.52% for loans with a 20% down payment. In response to refinance application volume, which is the most sensitive weekly rate moves, rose 8% for the week and was 50% higher than a year ago. This is the highest refinance volume since mid-August, so people are taking advantage of that. Now, the average loan size, that has increased to a record $371,500 thanks to stronger activity on the high end of the market. What I mean by that is, as you notice in these cities, towns, and states, they're not building a lot of new single-family homes, standalone. They're building a lot of luxury high-end homes and they're building a lot of townhouses, condominium, high-rises, things of that nature. Even though, like what we seen back in 2008 and 2009, like in places like South Beach and Miami, where there was a lot of vacant condos and high-rises there that they overbuilt, that people never, so the people filed for bankruptcy because nobody was filling up these places because they were well overpriced. Well, in this case, but you have to remember the average price of a single family home, this is according to usdebtclock.org, you can check it out yourself, is $360,000. Okay, $360,000. So yeah, the average loan size will have to increase to meet that, because otherwise people will not be able to afford, the basic single family home, whether we're talking a 3-2 or a 4-2, 3-bedroom 2-bath or a 4-bedroom 2-bath home. So mortgage rates climbed slightly to start the week, but are likely to head lower on the news that President Trump said he is halting stimulus negotiations till after the election. But obviously, stimulus negotiations, as we know, is going to be halted much farther than that. We're talking about to New Year's, February 2021, before we get any type of stimulus. And I'm not even sure if stimulus is going to come to the Main Street, or is it going to come to the Wall Street? Most likely Wall Street, so Main Street's not going to get that much. The average American, though, has over $90,000 in debt. Okay, isn't that crazy? So when you think about it, the home is the greatest asset of the average American in terms of wealth building, in terms of generational wealth building, and and of course of equity and net worth. But the average American, this is according to CNBC Select, it reviews the average American of total debt Americans at every age. The average American has $90,466 of debt. This includes consumer debt from credit cards to personal loans, mortgages, and student debt. Now, when we break it down, the media is saying that baby boomers ages 56 to 74 have $96,984 of debt. That's actually lower than Generation X, ages 40 to 55, who have $135,841 of debt. Millennials, ages 24 to 39, have $78,396 of debt. And Generation Z, from 18 to 23, they say they only have $9,500 of debt. And the silent generation, those 75 and above, have $40,000 of debt. According to Experian, which is a credit reporting agency, one of the big three, TransUnion, and the other one I can't think of is the big three credit bureaus or whatever. They said that credit consumers in the two oldest age categories have seen a significant decrease in debt since 2015. Meanwhile, millennials have seen the largest increase in debt in the last 5 years. No surprise there with the school loans and the credit loans and the auto loans for millennials nowadays. Nowadays, you can have a millennial paying $600 a month for an Altima, a brand new Altima, for 7 years because of their credit score and the way that they manage credit. That's really, really sad. But moving on, guys, I want to talk about this ending of the stimulus checks. This is going to mean a much slower recovery for the U.S. economy, which we already know, and while it's important that you still should be preparing, not only physically preparing with food, water, canned goods, supplies, energy, anything in case the power goes out, in case they say that supposedly there's sickness or pandemic, people can't come to the power plant and work and all that. There may be power outages or power shortages like they experience in other third world countries. That very well could come here. So people have said people have told me on the street that it's not just food supply shortages. We've got supply shortages on furniture, supply shortages on auto parts. You may go to the Discount Auto Parts or Advance Auto or AutoZone or wherever you go, and they may not have no batteries, or they may not have things that they get from overseas. Remember, these parts come from Mexico and overseas, and China and Singapore. So you may go there and you may not be able to get a starter or alternator that you can put on yourself, or belts, or V belts or whatever. You may not, or brake pads. You may not be able to get these things because there's going to be a shortage of auto parts and other supplies as well. Now, Cleveland Federal Reserve Bank President Loretta Mester said the imminent end of stimulus talks could mean the recovery will be much slower. So you're talking like 2 or 3 years recovery in their mind, but we know that on my channel, we know that it's going to take a 10 to 12 year recovery. But according to this Cleveland Federal Reserve Bank President Loretta Mester, she said that, quote, certainly, the recovery will continue without it, but I think that it's going to be a much slower recovery, and it's disappointing that we didn't get a package done. There's still a lot of households and a lot of small businesses that really need that kind of help. And even though the recovery has come in somewhat stronger than many of us thought, it would we would still be in a pretty big hole. Well, I got news for her. We're in a even more big hole. The longer they put off this talks, the longer they pretend like they're trying to help us when they're really hurting us, even putting us further in the hole. This is going to be absolutely disastrous for the U.S. economy. Listen, despite the packages we've had, the $2 trillion in relief funds from the CARES Act and the other packages that we've had, GDP has plunged negative 31.4% in the second quarter. And now they're saying it's on track to recoup most of those losses in the third quarter. But most economists expect a slower growth rate from here on out. We're going to basically be stagnated from fourth quarter into the next year. Employment gains from May through August have begun to decelerate in September. As you've seen, the last numbers came out. We lost over 850,000 jobs last week, ladies and gentlemen, and this has been the 30th straight week of 800,000 or more job losses. Okay, I misquoted last video and said that we lost 1 million plus, but technically it might as well be that. There's only 200,000 away from that, but I misquoted and I apologize for that part. That was my fault. But it's 850,000 jobs that we've lost last week, so things are not headed in a positive direction. So we need to be independent of the system. We need to continue to prepare as best we can. And that thing I would suggest too is whenever you're in the dollar store, continue to get things from there as well. For those of us that are on a limited budget, or students, or those of us who are on a limited budget, get things from the dollar store. I mean, like trash bags, gloves, masks, even they have paper masks there, stationery, games for kids. All kind of things that you can get there, arts and crafts and different things that you can get there, baking soda, baking powder, things that you can use on a universal basis to help us get through this, because this is going to be a long-term thing. This sickness is not going away, and the economy is not going to get any better in the next about 4 years, no matter who gets in office, because it takes 10 years to recover from a depression, which we are in. So continue to prepare. Be blessed, guys, on this weekend. Hope you take some time out for yourself, for self-care, and don't get burned out if you are working from home or doing some other type of alternative arrangement. Just continue to keep the faith, keep steadfast. Be blessed, and I'll talk to you very soon. If you have any questions or comments, please leave them down below, and thank you for your support today.